All right, Talk Tickers listeners, we are going deep on Progressive's Q3 2024 earnings call today. Got the transcript right here, got some stock info pulled up. So we're going to try to figure out what's making this insurance giant tick.
Yeah, should be fun.
Yeah, big picture, they're crushing it right now. Record policy growth, strong profitability, even hinting at a really bright 2025. But can they keep this momentum going? That's the big question.
Yeah, that's the question on everybody's mind. They added, get this, 1.6 million policies in Q3 alone. That brings their yearly total to almost 4.2 million new policies.
Wait, hold on. 1.6 million in one quarter. That's wild. How are they doing this?
Well, it's a couple things. They've been super aggressive with their media spending. Their rates are stable, which is attracting a lot of shoppers. And
Okay.
I think, honestly, some of their competitors have been a bit slow to react to the changing market.
So they saw an opening and just hit the gas while everyone else was still figuring things out. But here's what's really interesting to me. They're managing this crazy growth while staying profitable. I mean, their combined ratio is awesome.
Yeah, that's where their, you could say, secret weapon comes in. Segmentation. They're not just going after any customer. They're really good at figuring out which customers are the most profitable. And they're using data from telematics devices, driving behavior, even partnerships with other companies to create these really, really granular customer segments.
So they're like building a profile for every driver to figure out how risky they are.
Exactly. It lets them price risk more accurately and offer products that are really tailored, so they're attracting the best customers and pushing away the ones who are probably going to file more claims.
It's like they've figured out personalized insurance, but at scale.
But even with all that, got to be challenges, right? What are they up against?
The first one's got to be competition. As the other companies start catching up on rates and ramping up their own marketing, the markets can get crowded. So the question is, can Progressive keep growing this fast as things get more competitive? It's a good point. They've had a head start, but everyone's trying to catch up. And then the other challenge, it's been an issue for the whole industry, is property insurance. You know, Hurricanes Helene and Milton, those are big reminders of how unpredictable that business can be. And we're still waiting to see the full impact of it.
You're right. And while Progressive has been doing things to try and make their property insurance less risky, it's still a work in progress.
Yeah.
But gotta say, their combined ratio is really good, especially when you compare it to the industry average and think about Hurricane Milton. Seems like they're underwriting very effectively, and their tech investments are starting to pay off in claims processing.
So they're not just letting these challenges happen, they're actually trying to get ahead of them. So let's talk about how they're doing that. They're investing tons in technology, all the buzzwords, AI, automation.
And that's the smart move because they know technology isn't everything. They're also hiring more people ahead of time to make sure they have enough skilled employees to handle the complicated stuff and provide really good customer service.
So it's like a two-pronged approach, efficiency and expertise. Makes sense given how much they want to grow. But tech can only do so much. In the end, keeping those customers happy and loyal, that's what really matters.
Totally. Retention comes down to value and stability. Stable rates, great service, that's what makes people stay, especially when everyone's always looking for a better deal.
Which actually shows how smart their segmentation strategy is. If you can find the right customers in the first place, keeping them happy is a lot easier. Okay, so we've covered the good, the bad, and the plan. Now for the fun part, our This Is Not Financial Advice segment. Got to remind everyone, this is just hypothetical. For fun, we're not giving any actual investing tips here.
Always good to say that, but I gotta admit, today's trade idea is a wild one, so get ready. So taking all this into account from the earnings call and how Progressive seems to be going, I'm thinking we short Allstate.
Oh, hold up. Short Allstate. That's a pretty big move. Tell me more.
Sounds crazy. I know, but listen. Allstate is really tied to homeowners insurance, and that market, well, we just talked about it, it's got some serious issues. Progressive, on the other hand, they've got more going on, and they're trying to make their property insurance less risky.
You're saying Allstate gets hit harder if there's another hurricane or some other disaster, while Progressive is more likely to be fine.
Exactly. And this isn't about saying there definitely will be a disaster soon. It's about seeing the risk and how each company's set up to handle it.
Gotcha. But how do we turn this into a real trade?
Okay, so we buy deep out-of-the-money call options on Progressive, betting that they'll keep growing and doing well. At the same time, we short Allstate stock, figuring their value will drop as the market starts to realize those property risks.
So playing both sides, betting on Progressive going up and Allstate going down.
That's it. And the cool thing is, even if there's no big disaster, Progressive should still do well because they've got good fundamentals.
So it's a win-win. We either make a bunch of money if Allstate drops, or we profit from Progressive's steady growth.
Exactly. But of course, gotta be real, this is risky, very speculative. Not financial advice at all, folks. Don't base your investments just on what you hear on a podcast.
Absolutely. Talk Tickers listeners, always do your own research and talk to a financial expert before you invest in anything. Okay, back to earth. That trade idea was definitely out there, but hey, I like the creativity.
Sure thing. It's all about thinking about different possibilities and understanding how the market works.
So wrapping up our deep dive into Progressive's Q3 2024 earnings call, what are the main things our listeners should take away? What should they be watching for going forward?
Progressive's in a really good spot right now, but it might get tougher as competition heats up. Keep an eye on how they manage their growth, what happens with their property insurance, and look for any signs that things are changing in the market.
Especially with their competitors starting to catch up on pricing and marketing. Any other words of wisdom before we sign off?
Here's something to think about. Could what Progressive is doing with technology and segmentation become the model for other insurance companies? Pay attention to the whole industry and see if others start using similar strategies.
That's a great point, and it's something investors should consider when they're looking at insurance companies. Well, Talk Tickers listeners, that's all for our deep dive into Progressive's earnings call. Hope you found this informative, entertaining, and maybe even a little bit wild. Until next time, stay informed, stay curious, and remember,
This is not financial advice.
thanks for listening to Talk Tickers, everyone. See you on the next deep dive. And of course, Talk Tickers listeners, this is just one way to look at things. There are always lots of different perspectives and ways to think about the market.
Yeah, definitely. Do your research, folks, and be smart with your investments.
Couldn't have said it better myself. Big thanks to you for joining us today for this deep dive on Progressive.
It was fun.
Yeah, it was a good one. All right, Talk Tickers listeners, we'll catch you on the next deep dive.